Welcome back to the Brent Bruce Daily. Today is August 25th. It is now 2:25 p.m. Central Time, and there is a lot going on. And the man of the hour right there, Jerome Powell, has been discussing monetary policy with the Federal Open Market Committee in the Jackson Hole, Wyoming meetings. And we are starting to kind of get whispers about what's going on up there. And the home loan interest rate world and the mortgage-backed security world is liking what they are hearing. We expect that Jerome Powell is going to talk very aggressively towards fighting inflation. As a matter of fact, in this note here, Powell is expected to emphasize that the central bank will use all of its firepower it needs in the form of what? Interest rate hikes to snuff out inflation. Now, interest rate hikes, does that mean that home loan interest rates are going to go up? As we all know, following the Brent Bruce Daily, no, it does not. Now, it doesn't always mean that home loan interest rates are going to go down, but we believe that it will because we're going to fight inflation by raising the federal funds rate. They're not going to be raising home loan interest rates, and this is what you all need to be aware of. So they're going to raise interest rates, hike interest rates to the federal funds rate in order to reduce inflation, because inflation is the enemy of bonds, and mortgage-backed securities are bonds, and mortgage-backed securities are what actually affect home loan interest rates. So let's take a look over at our market. So right now, the mortgage-backed security market is up 36 basis points on the 4.5% coupon. And you can see right here, we're having a good day. Let's take a look and see what happens when the Federal Reserve makes its moves. Okay, now again, they're not going to be announcing until later in September their next change to the federal funds rate. But what happens when they do? Let's take a look over here at this article from the Board of Governors of the Federal Reserve System. And it says, this is some historical data. June 16th, they increased the federal funds rate by 0.75%, 75 basis points. July 28th, they increased the federal funds rate by 0.75%. So remember that, June 16th, July 28th, right? Let's go over to our charts. June 16th, boom, great run, right? Up, up, up. Look at all this green in the days following the Federal Reserve increasing the federal funds rate. And remember, when this goes up, home loan interest rates go down, okay? Then we have some negative inflationary news, kicks us down. We drift around for a while. Then July 27th, we get a good day because we're anticipating the Federal Reserve making an increase to the federal funds rate. 28th, it comes out. We have a good run and go all the way up to really, remember when we were talking about 4.625 on the Brent Bruce Daily right here. And then we drift back down, get some negative reports coming out as far as, matter of fact, I think this was a jobs number that came out at that point. We drift down, drift down, drift down. And then what do we get here? We get the Inflation Reduction Act report that came out or that was approved. And we know that that's highly inflationary. So that kicked us down, 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 down till we're hearing a buzz about the Federal Reserve being aggressive towards home loan, towards the federal funds rate and towards inflation. And we are liking that and having a good day. Now, tomorrow is going to be interesting because tomorrow we are releasing the personal consumption expenditures reports for July. Now, the personal consumption expenditure is very similar to the CPI, which the CPI actually came down this last report. So we would think that the PCE is going to come down as well. But now there's kind of rumblings that maybe they're seeing that PCE number coming in a little hotter than expected, which would be inflationary. And home loan interest rates would not like that report. But we are also going to be getting the actual comments from Jerome Powell. So not the whispers, but the actual comments, which then we might have a report come out that's inflationary and then comments come out that are saying we're going to fight inflation. So it's going to be interesting. We may have a very volatile day tomorrow that may end up with us way down in the morning and then way up in the afternoon or vice versa. So we'll have to see how things go. Now, again, this is the mortgage-backed security market. This is telling us what's happening with the mortgage-backed securities. Now let's see how that is equating over to home loan interest rates. And we got to look at the Brent Bruce Daily scenario to see how that is happening. Yesterday, we talked about that we were at 5.5% with a very small credit. I was mentioning that we could easily kick over to the 5.625 if we don't have something turn around soon. So here we are. We had something turn around. How are we doing, right? Is it equating to the actual bank interest rates? Well, here we are. We're still at 5.5. And our credit is actually lower than it was yesterday. Why would that be? Let's open this up and let's see what we've got here. Remember, we like to look at the 4.999 also, because at this point, we're now seeing it over 1.25 of a point to buy that 4.999. Yesterday, we were under. We were like 1.202 or something like that. So this basically tells us that interest rates are worse today, even though the mortgage-backed security market is better. Why would that be the case? I believe that it is because the banks, they don't just have to, this isn't a direct correlation. They don't have to pass that right over. They can hold on to some of it. So they can always say, I'm going to hold on to a little bit of revenue. But in order to be competitive, watching the mortgage-backed security market tells us what they're going to have to do to remain competitive. But as of today, why are they not having this increase in the mortgage-backed security market flow over to the interest rates that they're offering? I think that it is because of the concern with the reports that are going to be coming out tomorrow. So tomorrow has so much volatility that could come out that the banks are saying, I'm just going to hold on to what we have today. I'm not going to necessarily pass along that 34 basis point improvement. I'm going to hold on to things and I'm going to see what tomorrow brings. That's what I think is going on today. So overall, the mortgage-backed security market improved. Things are getting better, but the mortgage banks at this point have not passed it along to the consumer. So we're going to see what happens tomorrow. Make sure that you pay attention. I will keep you posted. You've got to subscribe, like, and share to the YouTube page to get more information about what's going on. I will talk to you again tomorrow. Have a good one.